Hello traders, and welcome to my video on the Advance Block Candlestick Pattern. In this video I'm going to show you how you can use this candlestick pattern to catch moves like this one for over 150 pips. Okay, so this is a relatively easy candlestick formation to look for. You can use it on any trading instrument. You can use it for Forex, crypto stocks, commodities, indices, etc. Can also look for it on any chart time frame. Here I have a euro dollar 1 hour chart. I personally prefer the 1 hour charts and above, 4 hour daily, weekly, monthly, simply because I find the candlestick formations to be more reliable. It's probably due to the fact that they have more price data. So yeah, that being said, let me explain what this candlestick pattern entails. So what we're looking for is first a trend. Okay, in this case we have a downtrend. As you can see, there's a clear downtrend here. Okay, and we're going to look to enter. You see the trend has come away from this resistance level up here. We're making lower highs. So the advanced block candlestick pattern, you're basically going to look for 3 candlesticks against the trend. So in this instance, we're going to look for 3 consecutive bullish candlesticks. As you can see here, 1, 2, 3 consecutive bullish candlesticks. This is against the downtrend. Most importantly as well with this candlestick pattern is we want them to be making lower lows and higher highs. You can see all the wicks are making lower highs, higher lows and higher highs, which suggests a reversal from this downtrend. I will say this is perhaps not the best example simply because we already have the trends quite well established. We might have wanted to enter here. I mean, I can see ample opportunities you could have entered just based on support there. Even this particular setup, this is good confirmation, which I'll get to in a minute. But here, once we saw this breakaway, once we had this breakaway out here, we might have wanted to enter off this ledge here. You can see that breakout candle there. You also have another candlestick pattern back here. That's a 3 inside down pattern, which is basically a bullish candle followed by a bearish candle that's at least 50% of the body of the previous candle, and the final third candle which breaks out below the initial candle. We also had price forming a resistance level over here, which was previously support, so this could have been an entry here on this particular pullback. Okay, that being said, you will find the advanced candlestick pattern, the advanced block candlestick pattern on in scenarios like this one. In fact, there's almost one here. It's just you would probably want the wicks to be slightly higher on the below and above these candles. Okay, nonetheless, it's still a good candlestick pattern to be aware of because it can give you good entries such as this one. So what you do is once you've found the 3 bullish bars, you've established the higher lows and higher highs. The entry based on the advanced block candlestick pattern is a breakout below the body of the initial candle. So this is the initial candle, that's the body. So we would trade this breakout here. Okay. Again, we have good bearish indicators. You can see that, you know, we're clearly in a downtrend. This level of also a wedge pattern forming here. You can see the price could just consolidate within this zone. It's a good reason to trade this breakout. You can see that's a huge breakout bar. This was NFP day, non-farms payroll, so you can get bars like this on the first Friday of the month. Nonetheless, that's still a good advanced block candlestick pattern to trade. Again, establish the trend direction, wait for a reversal, and the reversal can often form the advanced block candlestick pattern, which can be used to time entry. In terms of stop loss, once we've entered on the breakout below that candle, we can place our stop above the pattern. which here is around 10 to 15 pips, which also coincides with being above this resistance level here. Okay, so that would be a good place to place our stop loss. We've got in this trade, this is quite a significant downtrend. I mean, be good for over 200 pips. What we could have done is, as price moved down, we could have moved our stop loss with it. So once price fell to, let's say, once price first fell here, we'd move our stop loss at least to break it even, if not, half of this bar here. You can look to close some profit if you like. Just depends on your own money management. And then as price continues to fall, say around this area, you can move our stop loss here. As it falls down, we can just move our stop loss above the highs. For example, when price is here, my stop loss will be up around here somewhere. Price keeps falling, we can keep moving our stop loss and just lock in the trade. We probably have our stop loss now if price was here around this resistance level here, this high, this support come resistance, support there, resistance there. So this could be a good area now where our stop loss would be. We'd have this trade locked in nicely. Perhaps we would have taken some profit off the table and just be seeing how it plays out down this area here. Okay, so the Advance Block Candlestick Pattern, as you see, can help you catch some good moves. You will need good money management. For instance, you don't just want to get excited after you see this bar and jump out here. You're just leaving too much on the table. Is why I don't like to use fixed levels for stop loss and take profit. For example, if the stop loss was 20 pips here, I'm not going to say to myself, okay, 3-to-1 risk reward ratio, let me exit as soon as 60 pips is hit. Because you can see if we did do that, we're going to just be leaving too much on the table. Okay, so that's an example of a short trade using the Advanced Block Candlestick Pattern. Okay, so here we have an example of a bullish trade, a buy trade with the Advanced Block Candlestick Pattern to the upside. So what we established was the support areas around here somewhere. Market started to move in an upwards trajectory. Okay, we have a breakout of this level of resistance here. We have a nice wedge pattern forming, so a good breakout. So around this area we can see we are in the uptrend breakout, and then we're going to wait for the pullback. This is perhaps a pullback here if you didn't get in on the initial breakout, but for the purpose of this video we're looking at the Advanced Block Candlestick Pattern. So remember, is to first establish the trend and then look for 3 candlesticks going against the trend. So we're in an uptrend, we're looking for 3 bearish candles. So that's 3 down candles, and there we have them, 1, 2, 3. Okay, they're making lower highs, lower lows, so this confirms our Advanced Block Candlestick Pattern. As I said, entry is above the other side of the body of the initial candle. So for a long trade, that would be above the first candle here. Okay, so it's basically a reversal from a trend, and you're just going to enter on the breakout. I mean, it doesn't necessarily even have to be an Advanced Block Candlestick Pattern if you're trading these type of breakouts, in my opinion. It's just something that can give you that additional confirmation. There will be opportunities you can enter in a breakout. For example, here, I can't see an Advanced Block Candlestick Pattern, but nonetheless, that still was a good breakout trade. So yeah, you don't necessarily need the candlestick pattern for trading breakouts in trends. I mean, you can clearly see, you can clearly see we are in an uptrend, and we have a pullback and a breakout as signified by that big candle there. Same principle here. I don't see the Advanced Block Candlestick Pattern, but still that could have been an entry on that breakout there. Okay, so don't always need to use it to look for it to confirm an entry, but it can give you peace of mind if you see it and just want to use it as additional confirmation. Is relatively easy to spot on your charts. and just good to be aware of. If we zoom out, look at the bigger picture, this particular breakout trade here, it did have the potential for 200 pips. In saying that, we did have this big pullback here, may have arguably taken us out at break even if we hadn't locked in the trade around here somewhere. Has closed some of the position of banks in profit, but on the way back up you could have easily re-entered through, as I said, these breakouts here, possibly around this area here. You do have this level of support, and then becomes resistance, price goes out again, and then it becomes support again. So you could have been looking to enter, re-enter around there. Okay, you do have other candlestick patterns to be aware of. One thing I find quite conflicting with the Advance Block Candlestick Pattern is you do have another candlestick pattern based on 3 candles. In a downtrend, it's known as the 3 black crows. Okay, so they can be mixed up with the Advance Block Candlestick Pattern, just as the 3 white soldiers, which is like the Advance Block Candlestick Pattern with the 3 bars up as well. However, it's more about the formations in terms of the high and the lows of the candles, the bodies, the wicks, and in my opinion, most importantly, where they are in the market, whether they're in the range, in a ranging market, trending market, on a pullback. I personally want to be looking for them to help time entry into trends. Okay. Well, hopefully you have an idea of what the advanced candlestick pattern is and how you can look for it on your charts. Appreciate you watching. Please like and subscribe for more. Catch you on the next one.